What's going on, guys? Here is a quick trade recap, and as I said before, I love to journal, back test, and see what happened with our trades. We actually ended up with an awesome day overall. So let's dive into it. This is the first trade that we took today. Buy to open SPY 527 392 calls. I was looking for a bounce out of this expanding wedge support level around 38.80. So as you can see here, this is just a pattern and trend line play, but we held it beautifully right there around 38.80, and we're up nearly 83 points since. We took a scalp on that trade, which yielded 29%. It was a great day today for trading because we were really contained within range, and there was just a lot of up and downside to play. So this is the first trade we took, locked in for 29%. The next trade we took was... This is another awesome short that we caught. The S&P futures formed a 2-hour supply zone at $39.25, $39.40 area. I was looking for a pullback into this from this $39.25 supply zone down to $38.93 demand. I'm going to show you guys the supply zone right here. All right, so let me clean some crap up here. Okay, so this was the test of supply. So this was the fresh test. This is why, we want to focus on fresh levels. They have the greatest chance of there being outstanding orders that are unfilled. So with that being said, there is a test of supply where I alerted shorts. As you can see, it was a beautiful short opportunity. So we waited for supply to form. So supply forms. We caught it on the bounce back into supply right there. And then you can see that we faded right to my demand zone to the target. So what happened there was we caught a... So we caught that. That was a 39-point fade that we caught. And that yielded a 39-point fade that we caught for 52% on these puts. And then another sweet trade that we took was this long setup. Well, actually, I'm going to do that after. Where's our shorts? These are just my updates during the day. Okay, so here is a short that we took. Buy at open SPY, 525, 390 put. There was a wedge forming with bearish RSI divergence on the intraday. I was looking for a breakdown from the $39.26 area, targeting our long spot at $39.05. So this was the setup, and let's see how it panned out. And there it is, guys. It was a beautiful short play that we took. There was many things that I noted, like, bearish RSI divergence and whatnot. But we put the short on right there, where there was bearish RSI divergence that was developing right here. See, bearish RSI divergence where the indicator makes a lower high, price makes a higher high. So we had divergence there. So here's the wedge, higher high. We took the short in this area right here, strong bearish RSI divergence, and then check it out. And then we faded right to our 30-minute demand zone where we caught this huge long end of day. Right there at 39.05. The target was met. We caught that was a 32-point short opportunity. I think we got 50-something% off those puts. I don't remember what it was. All right, yeah, we got 57% on those puts where we locked them up, and then we caught the sweet end of day short squeeze, which was a product of after we had shorted on that wedge. So here's the plan, guys, and this is how we caught that beautiful end of day squeeze. I said that the S&P futures did in fact break structure. We made a higher high, which is that red line. It was broken with a full candle body, which tells me that buyers are now in control because trend has shifted, right? I'm going to show this in a chart real quick. I just want to show you why the zone was valid. So we had a 30-minute demand zone at 39.05. That was our entry point. 30-minute demand zone, 39.05. I'm going to clean up some crap on this chart here just so you can see what I was thinking about when we put the trade on. All right, so the 30-minute demand zone is right here, okay? I need to clean this up. Okay, So the 30-minute demand zone, or an imbalance as I call it, is right there, okay? The imbalance does not prove itself until it can violate some kind of structures, okay? So we plot out our 30-minute demand zone, which is 39.05, and you can see that this demand zone here had broken prior structure. It broke this high. So now we're seeing a shift in potential trend on this particular time frame, because you could see over here we were making lower highs, right? Lower high. We were making all lower highs, right? Lower high, lower high, lower high, boom. And then all of a sudden we get the shift, which suggests that that buyers might be taking control. And this was identified by waiting for a break of structure. So in hindsight thinking, when this 30-minute demand zone formed, I would not have taken the trade unless we had a break of structure. So what happens is they need to trip stops in order to move market, right? So what happens is you have breakout traders trying to catch the breakout here and failing because they're getting long after a rally in price and we're extended from demand. So smart money knows that, and they buy at wholesale, cheap prices. So what happens when the breakout traders try to catch it right here? Look at this. They end up catching a fake breakout, and they end up selling as price goes back down into demand where smart money enters. That's where we entered. And they sell for a loss. Smart money absorbs those sells, and then we boom, and then we just take off. So we got long there, and we caught a beautiful 51-point squeeze, which yielded, we took those for 63%. Structure is so important in this market, guys. When this is why I focus so much on market structure now, is again, remember we identified our 30-minute demand zone. It would not have been valid if this high was not broken. The high is broke, so once that happens, that says, hey, you know what? It's time for us to watch price and to see what can happen. So we retrace right into our 30-minute demand zone, right there, tested nearly to the tick, and boom, we get this beautiful breakout. I'm gonna do an update because I'm having a lot of requests on VIX, where I see us going. My projected path is playing out very nicely so far. I still think that the market is going to squeeze up a bit higher to trap some more retail bulls, because this pennant or triangle is incomplete. So wave 1, 2, 3, 4, 5. I think this is some kind of wave 4 or wave B. I think that we are going to see the VIX fade once more, which means market can squeeze, and I think we're going to get a really awesome short opportunity. I'm going to look for SPY shorts if the VIX can get into the demand zone, because that would be a completed pennant where a breakout is expected at least to break $35, $50 high. I think that we need one more leg down, because triangles must be subdivided into 3 waves each. So we should be getting some kind of ABC down, maybe something like this, like A, B, C to complete the triangle, where market could possibly, I think we're going to eat crap. And I think this is going to be a great area to look for shorts on the S&P or QQQ, depending on whichever you like to choose. Short anything, honestly. I mean, I believe VIX can break out here, and you have defined risk because the triangle is void if we break below here. So it's safe to assume that if that holds, we get a huge spike in volatility, and I believe a big short opportunity is on the horizon. Hope you guys like these videos. Subscribe and check out my public feed for more. I'll be a lot more active on my YouTube channel.